All right, what up YouTube? Welcome back to the channel, another episode of the Crypto Breakdown. I am your host, Ryan Matta. Topic of the day, Fibonacci Extension, Fibonacci Retracement tools. So there's two different tools on TradingView. I'm going to teach you guys exactly how to set them up. I'm going to teach you guys how to input all the values. I'm going to teach you guys how to color code them. So based off of percentages and statistics, what targets you're most likely to hit. I'm going to teach you guys how to do it all, and I'm going to teach you guys how to do it in replay mode on TradingView. So that way you guys can come over to VeChain. You can pull up VeChain on the exact date, on the exact time, on the 1 hour time frame using the regular candles. I was going to teach you guys in the Fibonacci candles because they're actually better and more predictable and you can make more accurate calculations. But in replay mode, we can't use the Fibonacci candles. We can only use the regular candles. That being said, let's dive in. Let's get it. This is probably one of the best training videos I've ever made, so hopefully you guys enjoy it. Love you, squad. Shout out to all the members and everybody that signs up for my crypto coaching classes. I can't thank you guys enough for supporting the channel. So before I overtalk it, let's dive in, let's get it. And of course, as always, this video is for entertainment purposes only. I'm not a financial advisor and I've never advised you to invest in crypto in any way, shape, or form. Thank you. Let's go, let's go, let's go.
You pack the flashlight, the blanket, and the map. It's a real adventure, the trail you're looking at. I'm glad you came. For a while I thought you might be bailing. Is that the same yellow shirt you used to wear? But 1,000 years seem like all.
Alright, squad, what we have over here, we have VeChain, Tether. So if you come over here and you search VeChain and you search Tether over here on Binance, we're going to pull that up. So if you guys take a look at my chart right here, I'm going to teach you guys how to use the Fibonacci Retracement tool, which is this one right here. Click here, pull it down, that one. And then you also have the extension tool, which is this one, where you pin to 3 locations and you make predictions going to the upside. I'm going to teach you guys exactly how to use these. I'm going to teach you guys how to color code them. We're going to go through it every step of the way. And we're going to also learn a little bit about Elliott wave formation. And I'm going to show you guys the structure, the 1, 2, 3, 4, 5 structure, and exactly how that works out. That being said, let's get it. All right, squad. So one of my favorite ways to chart out coins is on the 1 hour using the Fibonacci extension and retracement tools. So you can see on this chart how much stuff I have going on. Anytime you're entering any trade, in my personal opinion, this is what your chart should really look like. It should look like an absolute disaster. That being said, over here we are able to make some really good price predictions and take some really good trades on VeChain during this bull run. So I want to show you guys exactly how I was making those price predictions and exactly at what points, and you can enter and exit trades and yada yada yada, the whole 9 yards. Again, no formation is ever going to be perfect. This is just going to be able to give you a general understanding of where price may or may not be headed. What are key levels that you'll be looking to take profits at? How high can price go? The whole 9 yards. So this is, in my opinion, VeChain was a really, really good formation right here in this area. And you can see we have what's called a Elliott wave, a 1, 2, a 3, a 4, a 5. Like, this is the formation that we are looking for. We are looking for Elliott wave formation to be making this 1, 2, 3, 4, 5 step to the upside. So to get started, I wanted to make a training video that actually teaches you guys how to use these tools and how you can actually practice using them. So we're going to go over and we're going to search VeChain. We're going to grab VeChain Tether. We are going to grab VeChain Tether on Binance, open it up. We're going to come over here. We're going to make sure we are on the 1 hour. And when I'm actually charting out coins in a bull run, I like to use the Fibonacci candles. So I'm going to come over here and I'm going to turn on the Fibonacci candles. So if you look right here, you can see Fibonacci turned on. Now you can see my chart and you can see this pattern here. Your 1, 2, 3, 4, and 5. This is the pattern that I'm looking for. When I'm looking at a chart, I'm looking for that 1, 2, 3, 4, 5 structure. And you can see just because you have the 1, 2, 3, 4, 5 doesn't mean that price is not going to continue to the upside. It's all about just looking for this formation and looking for entry points and exit points on trades. So for example, we have price running sideways here for a minute. When price is running sideways, that is basically how I know when I'm getting ready to start a 1, 2, 3, 4, 5. Now I could also push 1, 2, 3, 4, 5 down, but this is just going to be covering just a 1, 2, 3, 4, 5 to the upside. So when VeChain ran up here, hit its peak formation here after a big, nice long run up. So right here, when VeChain makes this big push up to the upside and starts to run sideways, what it actually did here is it starts a downtrend. So that's what I'm kind of looking for. I'm looking for a push to the upside, a run sideways, a downtrend to be started, and after that downtrend is broken, this is where we could possibly look for an entry point on this trade. We could have taken it here, but we want to make sure it's actually pushing up and we're getting candles finishing above the downtrend. So once that downtrend is broken, I then start working on leg one. So when I'm trying to figure out how high leg one is going to go, I can come over here and grab my Fib Extension tool. And you can see what I did was I had this trend here. Trend gets broken, right? When that trend line is broken, I'm going to the previous high and I'm going to go to the previous low. And I'm going to grab my Fibonacci Extension tool. I'm going to grab my Fibonacci Retracement tool. I'm going to pin up to the highest point and I'm going to bring down and pull down to the lowest point. So when I was looking to make price predictions on how high up VeChain price was going to run before it started to retrace, my peak target would have been right here at 11 cents. And you can see that this is not perfect. It doesn't mean that it's going to stop right there. But what this gives you is a general idea of how high price might go before you're going to look for price to start coming back and retracing. So once it passed this upper level of the 1.618, that's where I would be looking for a retrace. I'd be looking to take a lot of profits out of that trade if I entered at trend break. So you could have entered this trade right here at 9 cents, rode it up, and that would have been a 20% profit in less than, you could have walked with 22% profit on that trade in 1 day, 14 hours. So the first thing I want to show you guys is how to actually set up this tool so that when you pull it out, it looks like mine. And I'm going to teach you guys how to do it so it actually color codes it automatically for you. So we're going to come over here. We're going to double click on the Fib Retracement tool. So this is the Fib Retracement. So these are the key levels I use. I do not use the 0.236 because when you start turning on all these other levels, you're like always going to hit one of them, you know, and it's only the main ones that I want to focus on. So I'm going to have on the 0, the 0.382, the 0.618, the 1, 0.5, 1.618, and 1.382. So right here, the 1 going to the upside, I'm going to make green. This right here, I'm going to make yellow, the 1.382, and the 1.618, I'm going to make red. So when I'm entering trades based off of probability of how likely I am to hit those targets or when I should start to scale out of a trade, depending on the market will depend on where I most likely will see price going. When the market's super bullish, obviously I'm going to call it to the 0.618, kind of questionable, 1.382. But the green target is a safe way, in my opinion, for you to take a lot of profits and consistently stay profitable when trading. So I'm going to teach you guys how to use this method and scale out of trades properly. So that way, at the very least, you're almost always breaking even if you can hit the green target. And then same thing with price going down to the downside. This will be our red. This will be our green, our yellow, and this will be our green. Those of you guys that watch me, when I make price predictions, I come over here and I'll do things like this. So my green target, because it's normally right at the peak of the previous formation, I'll normally put my green, like when I put it on here at night when I'm doing the lives with you guys, I'll move it up just a little bit above it because I have a feeling that price is going to try to push up past that previous all-time high. Even if it's just a wick up, most of the time it'll actually happen and hit that target. And then I color code them and I come over, and when people ask for price predictions and I give them 3 target levels, this is exactly how I do it. So if you actually go through and you set up your Fibonacci Retracement tool to automatically be red, yellow, and green, you necessarily don't even have to come and put these key price indicators right here. You just know where it's going to go. And then now after I do that, you come down here in the bottom and you hit save it as Matt as Fib, and hit save and hit OK. Now what's going to happen is anytime you need to re-pull that up, you don't have to go through and actually customize it. So again, let me show you guys these levels. We have the 0, 0.382, 618, 1, 1382, and the 1382 might be different. So it might be 267, whatever. You need actually manually input one of these, and I think that's it. So if it's not in there already, just manually type it in yourself, 618 and 0.5. Now, my trend line, I always leave white. That way I can see that white trend line coming through. Coordinates don't matter. Visibility, really simple. None of these I don't have to change or customize or do any of those things. So now that we have the Fibonacci retracement tool set up, right now, when I'm looking to see where price is going to retrace to, I'm going to delete this, delete all these. And so I have to switch back over to the regular candles because it won't let me do it in replay mode without having the candles there. So now that we have the retracement tool set up, we have our trend right here, and I had to switch over to the regular candles because it won't let me do replay mode, and I want you guys to be able to practice and learn. So we're going to come over here, and we have we're going to pretend like price just peaked out right here. So we can see price peaked out here, just started to retrace and come down. How far are we looking for price to come when we retrace? This is a perfect place to use the Fib retracement tool. I come here and I pin the low, and I pull up right to the high. I want to put my 0 level right at the peak. So my white line should be right at that exact price. Now, you have 3 key levels where price is most likely going to retrace to: the 0.382, the 0.5, and the 0.618. When we're talking about Fibonacci levels, and you can see right here, when I say price is most likely going to retrace to this level, the 0.382, the 0.5, the 0.618, that is a mathematical percentage based. So my 0 up at top all the way down here is 0 to 100 or 100 to 0. So when I say I'm retracing to the 0.382, that means I'm retracing 38.2% from peak back down to bottom. 0.5 would be 50%. So if you measured from here right at the bottom all the way up to the top, that'd be 100%. So when you start to retrace, these are retrace percentage levels. When the market's super bullish and coins are just zooming up on the retraces, most of the time price only comes to the 0.382, but it's still normal. Formation is still good. I would still be looking to, take positions on that trade during retraces, or if I was shorting it, I'd be looking to take profits pretty close to the 0.382. That's normally on the retrace. If you can get in at peak and a coin's retracing, a majority of the time it'll come down to the 382. Now, how I showed you guys this being a 1, 2, 3, 4, 5 structure with the Elliott wave. On the first leg, a majority of time, you're looking for price to retrace to the 0.618. On the leg 1, when it's coming from position 1 down to 2, you're looking for a retrace of about 60%. So here we go. Trend break pushes the upside. Where do we think price is going to come down to? Right here, the 0.618. So let's play this out, and you guys can do this as well. So this is VeChain, April 3rd, 2021, and price peaks out at April 7th, 2021. So now we hit the play, and you can see price starting to come down here. Hits target 2, hits target 3, wicks down, and look at that. Where does price retrace to, guys? Like freaking clockwork. It's almost unbelievable how accurate this is. So that being said, what do we have here on this retrace? What's the first thing you guys can see? When price starts coming down, what happens? We have a trend. So right here, so now let me remove my tools. Since you guys can see that, I'll remove that Fib tool. So now we have a trend. We have our downtrend started. And what happens? How do we have a downtrend, for example? That's a better place to start. We have now price right here was a trend break. So I come right here to that candle right before the trend break. And it comes to push the upside. And we see right here, these wicks, that starts our uptrend. So now we have an uptrend, and in order to have a trend break, you need candles pretty much finishing on the bottom side of the trend. So this one right here was just a wick, didn't finish below it, so it was still in an uptrend, all the way up to right here. Now we have a trend break. So at the very least, you should have exited this trade here at 11.47.6. And what's funny is, remember when we used our Fib extension tool, our Fib retracement tool, on the first leg up, when I don't have any formation to go off of, I use my retracement tool to, like I showed you guys, pin up and down and look at where we were told to exit that trade at. Where would we have been exiting it? Not only at the 0.618 here, not only at the 1.618 here, but also when that trend was broken, and they almost happened at the exact same time. Now we have our trend break, started the downtrend. We had a proper retrace where price pulled back down and hit that key level on the fib of the 0.618, which was right about here. And now price starts to push the upside. When is it safe, or when is it a good place to re-enter that trade? When your trend is broke. Because look at, price breaks through it, goes up, starts to come up, but then it starts to come back down. But where is it finding support at? On your trend line here. And now it looks like it's going to start pushing to the upside. What we have here now is we have a low, which was 9 cents. We had our peak over here, which was 12 cents. And we have our low right here before the trend break of 8 cents. Now we can get back out our Fib Extension tool, which is this one right here. We're going to pin to the low. We're going to drag, pull up to the high, and we're going to pull down, and we're going to put our 0 right at the bottom of the 0.0986. We're going to put it right at that lowest point, like that was a horizontal line tool where price found support there at that line. So I'm going to delete some of these other things. And we're going to come in here, and we're going to double click on this. I'm going to come over here, and same thing. So my 0, I'm going to leave white. My trend line, I'm going to leave white. My 0.382 is what? So we have our 1, which is green. We have our 1.382, which is yellow. And we have our 1.618, which is red. Over here, we have the 0.382, which is green. We have the 0.5, which is yellow. And we have the 0.618, which is red. Now, again, everything else is turned off. You might need to manually type in one of these. And we hit OK. So you can see there is our trend right here. But the trend, you go from candles. So this is just in a diagonal line that kind of makes like a triangle type deal. Now we're looking to see where price is going to push up to on the upside. If you're a scalp trader and you were to enter right here when it hit the 0.618 on the dot and you wanted to scalp that up, a lot of people will use these lower targets, the 0.618, the 0.5, the 0.382 as targets to hit. But when I'm actually looking for price to break out of the zone and actually take off to the upside, I need bigger targets. These are my higher targets. If you wanted to scale out of this trade, you could say price would be going to 13 cents. Price would be going up here to 14 cents. And price would be going up here to 15 cents. Now, so we have our trend break. When would we have re-entered this trade? I would have re-entered this trade like I showed you guys right here when this trend is broken. So when this trend got started and got broke, I would have been looking to take out a trade on VeChain right here at about, 10 cents, give or take. Now let's play it out and see if any of our targets were going to get hit. And you can see at this target, I suggest people scale out of the trade and take 85%. Up here, I take another 10% and I leave that 5% in up here. And this way, if price keeps pushing the upside and you actually hit all your targets, you're good. But right here, once you get 85% out of the trade, a majority of the time, if you enter here at 10 cents and price goes all the way up there, that's 22% on a single trade. I'm not greedy. 22% is more than enough for me. So now we're going to hit the play button and we're going to watch and see how price reacts. And you see price still finding support right here. Hasn't broke down. As long as it stays above this target right here, this low right here, I'm confident to stay in that trade and ride it out and see how it plays out. And sure enough, we did. And I'm glad we did, because it turned out to be one of my most well charted out trades this entire season. I charted it out every step of the way. We played it all the way up from bottom to top. And now you can see price working. its way up, working its way up, working its way up. So once this trend right here was broke, you then start another trend. So now we have our next uptrend started on the push to the upside. And you're looking at it right here. And you should watch price steadily find support on this level right here as it works its way and starts pushing to the upside. And you see, once you have these trends started, these trends really act like support for the coin and really help push itself to the upside. And you can see right here, as I don't even have that set perfectly. So honestly, it should be like that, more so like that. And nothing's ever perfect, guys. That's what everybody doesn't seem to understand, is like formation doesn't necessarily have to be perfect. It just has to be going in the general direction. I need to be able to analyze and see things for myself, right? Just because price kind of comes below this trend line for 1 or 2 seconds doesn't mean I'm going to exit that trade. I'm most likely going to weather it out. And whenever you're making a trend, you're honestly supposed to go to this level right here, to this wick here. And then the next one that pulls down would have been right there. So you can see from this wick right here to this wick, that's where I would have started my trend at. And what does it do? Price is zooming to the upside, pushing to the upside. Let's see if it's going to keep pushing up to our targets. I'm pretty sure it does. The second it hits right here, this green target, I would be 85% scaled out of that trade. Bam. Got my profits out, and look at, see how it dumps down right there? But find support again. But that's one of those things where it necessarily didn't mean that it was going to completely come down or not find support. But see, coming down to test this trend line again. And now it's getting ready to push to the upside. And that's one of those times where you take 85% out and you leave the rest in to, you know, prevent FOMO. And we're going to see if we're actually going to push all the way up here to the 14 or 15 range. We're all sitting here like, go VeChain, go baby, go baby, go. Go baby, go baby, go. So now we're 95% out of this trade right here. And we see price kind of hitting a peak, and it's going to make one more push up. And I don't know if it's going to hit our upper target or not. It'll be close. And now if I saw a double top here, it starts to act like that, I'm most likely going to be thinking that that's probably the peak, and I'm going to be expecting a retrace right now. So let's just pause it right there and pretend like we think that's peak. Where would we be expecting a retrace to come down to? Now, same thing again. I'm going to grab my retracement tool, pull up to the upside. That is my peak formation. Now we're going to be looking for price again to retrace down to a key level. We should start a downtrend, and we should be able to look for price to push to the upside. So I'm going to let it keep playing. And what do we have right here? Confirmation, trade exited. At the very least, if we were looking to exit that trade, that's when we would have exited that trade. Now we're looking for price to come down and test one of these levels. If it doesn't and it pushes to the upside, I would be surprised. I'm not sure if it doesn't come all the way down, though it might not. And you can see how close the wick was to coming down here and testing it right here. I personally would have considered that, you know, fair enough retrace, and I could have been looking for a push to the upside. And again, now what do we have starting right now? Now we have our downtrend started right here. And that's a perfect example, guys. Look at it wicking down here. See that? It was so close to hitting our target down here. And now it almost double bottomed right here. But look at, bang, like clockwork, guys. See how accurate this is? Now, once it hits these levels, if we are confident, you know, this is where kite would have been taking longs off these key levels. You could have entered a long here with a, let's see. No problem at that point. You technically could have entered long with like a 2 or 3% stop loss and been safe in that trade. But when I'm looking to enter my trade is at this trend break. So we would have exited at our targets up here. We would have been able to either re-enter right here or when this trend is broken. I personally like the trend breaks, but they're definitely more profitable if you can snipe in and get in here on these lows. But again, that's for a different video. And now right there, bam, bam. Now we have trend break confirmation. Boom, baby. So now we have price came down here. Price shot up all the way here, hit this target. Price retraced down right there, and it made it to one of our 3 key levels. If it makes it to those 3 key levels on a retrace and starts to push to the upside, once that trend's broken, I'm assuming that it's going to make another leg up. So let's zoom out, and I'm going to get rid of my fib. We have that trend break. We have our price reverse point. And if you take a look, and I move some of these things out of the way really quick. So our 1, 2, 3, 4, 5 structure is right here. And this takes a long time to actually get really comfortable to see and spot out. We have a 1, 2, push up 3, right? 4, and now we're making that 5th. The rules are leg 3 is normally the longest, but can never be the shortest. That being said, we can see right here, leg 1, leg 3 is super long. So no matter what, leg 3 is already not the shortest because leg 1 is. On a leg 1 push, you're looking for a retrace, a pullback down to about 61%. When you push up on the 3rd leg, a majority of the time on the 3rd leg, I am legit only looking for a retrace between the 0.38 and the 0.5. That's my 3rd leg. Now the 5th leg. The 5th leg is the most predictable trade to take. It's, in my opinion, the safer ones, because now right here, when we had this, we literally were just pulling the fib retracement tool down and giving us an estimate of where it was going, but we had no formation or no pattern to support that price was going to continue to push to the upside. Now, what do we have here? We had our start, push up, hits a key target fib level, so it rises. In proper formation, it retraces right on target to the 0.618. Then and trend break here. So you have another confirmation, trend break, pushes to the upside, hits another key target on our fib levels. Retraces down, hits another key fib level on the retrace, and on top of all that, we have a perfect 1, 2, 3, 4. Now we're working on the 5th. So by the time we're getting ready to take the trade on the 5th, when that trend line is broken, we have had so many different points of confirmation that it was safe to enter that trade, that most likely this pattern, the ABC, the Elliott wave structure, was going to play out. So now when you're using your fib extension tool, it's super simple. Like we did over here, we pinned on the 0, came up to the 1, and pulled it down to the 2. Now again, we can pin on the 2, pull it up to the 3, pull it down right here. So this is where it can get a little bit tricky, depending on how the market is and the market conditions. And you can see right here, when I only retrace to the 0.32, my key levels are right here, the 0.382, the 0.5, and the 0.618 are just above level 3. So sometimes I was actually only calling price for a 5th leg to come up here. But since we're in a bull run and we know price is going to run, these would be our key levels that we'd be expecting the chain to run up to on this next push up. On a 5th leg trade like this, I think that this is most important to make sure you're scaling out, because if you got in here and rode this all the way up from, say, 8 cents all the way up to 20 cents, you are up 134% in 9 days. And this is legit exactly how we traded this, play by play. And I have a VeChain how to manage a trade video that you guys can watch as well. But let's see if it's going to play out and how it's going to play out. I'm going to turn this up a little bit. Now we'll make this as our trend. We have our uptrend started. Let's see if price can rise up and find support. And what you'll see too is a lot of times you'll see it hit these key levels right away and get rejected, because that's a key fib level. So you see how it came up there, shot up there, got rejected down? It's because bots are trading off these levels. These are the same exact tools and indicators bots use. Bots execute probably 95% of trades in the crypto world. And here it is. We see price pushing the upside, pushing the upside. Our trend is still good. Our formation is still good. We have officially started that trend there. We have 2 key points. As long as prices find support here, if it doesn't break it, I would stay in this trade and keep pushing the upside. You can see target 1 was so close to being hit right there. If I actually pull that down right to that level, we can see it. I think it was hit right there, but either way, it got hit right here on this push up. So we would have been 85% out of the trade right here. On BitsGap, the trading bot platform that I use, you can trade from any exchange on any platform right from there. So it's nice because I don't have to chase coins around to 5 different exchanges. I can just place all my trades right on one platform. Once I break this target, I initiate a 5% trailing take profit. So at any time, if peak formation was hit and it retraces 5% right there, which it was, I would have been taken out of that trade. And now you can see if I would have waited till a trend break, it would have been all the way down here. And that's a wrap, guys. So now we see it doing the same thing here again. You could literally just rechart it out, but now at this point, our level 5 is hit. So instead of just a retrace, I might be looking for different formation. I might be looking for something like an ABC pattern to play out. So if it come down here, push up, and then come down here, and then make a next push to the upside. After the 5th leg is hit, you kind of got to reevaluate this situation. You got to kind of relook at the charts, and you got to see if any of those patterns are playing out. So again, this tool right here where you're pinning at 3 positions is your extension tool. The retracement tool, you just pin at a bottom and you pin at a high. So anytime you're looking at price, you're 1, 2, 3, 4, or ABC right there, whatever. So our retracement tool, I pin at the top and I can pull down to the bottom and it'll give me an estimated guess to the upside, or I can pin at the bottom and pull up to the top. Whenever I'm looking at a first leg, like a leg 1, I'm using the retracement tool to make a push to the upside because I can't pin at 3 places. I only have 2 spots. I have a high and a low. And when I have a high and a low, I can come in here, pull, I click on the high and I pull down to the low, and it'll give me an estimate, either the 1, the 382, or the 0.618, or the 1.618. Now when I'm looking for that retrace on how far it's going to come back, I pull here. Instead of pulling at the top to the bottom, I'll go from bottom to top, and then it gives you the retrace down on the bottom, and you can see at A down to B, 0.382. Like over here, I didn't necessarily have a ton of formation or anything good. I just had a high and I had a low. With that high and this low here, and why am I not going back farther? Because right here I can see we have that trend break. Once that trend was broken, okay, that was the high. Now how low is it going to go? It goes to this low. So I legit click on the top, down to the bottom, and I can see that's how I was making that first leg 1 price predictions. And that's why I very rarely take leg 1 trades, because you don't really know that they're a leg 1 trade, or you know. And then once you pull back and you hit your target on the proper retrace, so on our retrace again, if I'm looking for the retrace, I'm going to pin at the bottom at the 0, and I'm going to pull up to the 1. And you can see, like clockwork, guys, right on the money. Exactly T for T, play for play. Shout out to all the members and everybody that signs up for my crypto coaching classes. I can't thank you guys enough for supporting the channel and giving me the opportunity to train you guys. So let's dive in. And again, if you guys are new to the channel, I have 15 videos just like this that walk you through everything you need to know about being a beginner and getting into trading cryptocurrency. At the very least, the $9.99 you're going to pay, I promise we'll find at least one trade that you do not take because of what you learned in this class. That one trade you save money on, $10 on, will pay for this class 10 times over.